Orlando, it is great to have you with us this morning. I certainly want to get into what you've announced in Miami and Bitcoin. But first, with the NASDAQ at session lows, I want to get your thoughts on the broader market. We saw this decent rally in tech, but markets seem to be getting more cautious again. Do you think it was a bear market rally? And how are you thinking of deal making at this moment?
Well, Deirdre, first of all, thank you for having me. I spent all week in New York, the first part of the week where it was raining, and then I came in last night to do a panel that they had asked me to do at the Bitcoin conference, and I feel like I need sunglasses here. It is bright, there's music, there's 30,000 people in Bitcoin, a completely different and very, very interesting environment. Look, it is very clear to us that the market has changed. The market is looking for profitable growth. And these great software businesses and these great innovators now for about a decade have done a great job at innovating, at focusing on their top line, at accelerating those growth rates. And those trends are very powerful and even doing better today. But at the same time, investors, and public investors in particular, are looking for shorter-term profitability, especially with the rising interest rate environment. So that has caused these software stocks that are unprofitable today, yet they are great companies, to be down on average over 50%. And everyone needs to get the memo that the market has changed and you need to be highly profitable and show that while you're growing your business. For us, we have been buying software companies and partnering with these great innovators and teams now for 25 years. And we have one mission. Can we work with these great innovators to also have them be great companies? And the way we're seeing the market now is incredibly attractive if you can buy control with existing management of a software business that fits your strategy, because that gives you the capability of improving operations and creating that profitable growth that all investors want.
Orlando, as you say, Thoma Bravo has 25 years experience, but you're starting to see examples of other firms with little tech experience come into the space, like Brookfield this morning with CDK. So valuations to them may be looking more attractive, but what is the risk that it ends badly for them, especially as rates rise and they may be unable to make them profitable because of that lesser experience?
In the overall industry, competition is good. And we actually need more control private equity players in the software space. Just SaaS software today is over a $2.5 trillion market cap, and that's just in the public companies. So the more players that come in and understand it and do a good job, it means that firms like us and some of our peers have more places to look for liquidity and more homes for these great assets with good owners. What are the odds that this ends badly, as you say, for some of these owners? Look, if you have a clear operating plan and alignment with management, it comes back to operations, and that's what's different about private equity than the public markets. If you have a clear plan and a track record of doing it, where you can produce high margins out of these companies, 40, 50%, what are the odds that it ends badly? Very low, because you have incredible tailwinds behind you where the whole world is going digital, where software is not an industry anymore, it's the business of every industry. And on top of that, you have incredible business economics. Where do these assets trade on a PE basis versus the S&P 500? Higher growth, all recurring revenue, better businesses, they'll trade at a premium to the S&P. So if you can produce that in your business case, you should be in good shape.